look at South America, you look at Chile, which is a large copper producing nation. Mid-70s, producing the same amount as Zambia. But now Chile is producing about 5 million times, 5x what we were producing in a 40-year period. What we lack is investment in exploration and investment in technology, and also just lack of information. The data that helps you make quick decisions to basically find where these things are. To have a 5% copper deposit in Zambia means, wait, there has to be more. Because 5% is, like having a unicorn. So that tells me that we haven't unlocked finding more Mingombas. It's not that these resources are running out. For every $1 billion spent, you get less than 1 discovery. 30 years ago, for the same amount of money, you got about 8 discoveries. So in a 30-year period, the industry has gotten 8 times worse at making discoveries. And this is what KoBold does differently. Right now, we punch way above our weight for a company that was founded in 2018 because we leverage having in-house software engineers, data scientists, and geoscientists collaborating together as explorers. Firstly, we always say this country is overdosed on copper because there's so many other things we should be looking for. We have a robust emerald industry, we've got manganese, there used to be, large zinc mines, lead was a commodity, iron is a commodity, and many other countries are still tapping into these areas. And now we're in the era of looking for critical minerals that are going to drive the energy transition. People are looking for more cobalt, nickel, and for lithium. Infrastructure is never a problem when there's an economic deposit. Infrastructure follows an economic deposit. You can imagine when FQM was working to build out Kalumbila, the houses followed, the roads followed, the electricity followed, so I'll put infrastructure away. Capital always follows good projects. What you need is the basis to make that project work.
Zambia has been heavily reliant on hydropower. 85% of our power comes from hydro, and we were quite comfortable with that. The rains are here. And when the drought hit us, I think it took everybody by surprise. Yes, we have experienced some droughts over the years, but this was the worst that we'd experienced in I believe it's around 100 years. The usable power in Kariba alone was under 14%. So previously, before open access was introduced, you could only face ZESCO. But now you have the opportunity to have independent power producers be able to face consumers, whether that is the mining sector, industry, and ZESCO themselves, to enhance the provision of power. And what that has done is it's also introduced competitiveness. Kariba North Bank Extension is a fully owned subsidiary of ZESCO, but it's also a special purpose vehicle that allowed us to ring fence the activities of the project in terms of the funding going into it and the recovery of the credit line through the SB itself without the reliance on ZESCO. What we needed for that to improve the credit worthiness of that, we needed reliable off-takers, so the mining sector came in. First Quantum Minerals was a key partner there, and then we also had the credit enhancement through GreenCo as a power trader that offered another outlet for the bank that allowed it to have that credit worthiness that made it a robust structure. We've got an ambition to grow the production, the mining production, copper production to 3 million tons. With this sheer demand for critical minerals that we have globally, Zambia is well poised to do that. but the main constraint will always be energy. The mining sector consumes about 50% of the energy production in the country. So if we don't grow that energy, the energy capacity, we're not going to achieve that. It's as simple as that. So this is not an area where Stanbic is going to say we want to be the only player in the market. There is so much scope for development. There's so much scope for growth of the energy sector. So we are happy to see so many players coming on board. So I think the key word, if I was to leave one key word, is collaboration.
The crisis served to stimulate and accelerate investment in domestic generation. That's been a big positive. And there's been, I think, a very big shift in the private sector also doing, an equal, if not an even bigger amount of heavy lifting in terms of the capital investment in this. It worked because I think the right parties came with a very pragmatic, solution-oriented mindset. We had GreenCo taking a portion of risk, ZESCO taking risk on the structure, providing the long-term supply, and customers. So the financing, the operational, and the trading elements came together very well from the parties that put the structure together. Investing in a large project and looking at only a domestic market is far less attractive than looking at the same project and looking at a wider regional market over which we can that project can sell power. Trading power means greater ability to de-risk projects. Selling power to one client, as I said, versus selling power to now not just Southern Africa, but even into the East Africa power pool. We sit, at the nerve center, of power flows, with huge demand center being the DRC, the Katanga province. We've also got the East Africa power pool now being connected to Zambia through the Zambia-Tanzania interconnector, and so you will have two power pools that will then trade power between each other. And Zambia again, sits, at the midway point. The biggest success factor for us, and indicator, will be an open access framework that is functional, that supports market-based project development and activity, that supports the appropriate allocation of risk and reward among the various players in the value chain.
In our methodology, there is a little bit of wiggle room that allows to lift a sovereign that is still engaged with restructuring process under two conditions. Firstly, that the majority of the debt that is to be restructured has been restructured, which in Zambia's case stood at around 94%, so it ticked that box. The second part was that there's a reasonable belief or opinion from the rating agency side that the remaining debt to be restructured does not pose the already restructured debt at risk. If it hadn't been for this conflict, and if restructuring had been even closer to 100%, there would have been a real argument for positive movement on the rating. But I think the fact that those two things are still in play will probably keep them at the CCC plus for the foreseeable future. Yeah. So I can't really comment on what the other agencies are doing or seeing or how they apply their methodologies. But from S&P's perspective, there was quite a bit of deliberation whether or not to take Zambia out of default, given that the restructuring had not been 100% completed. We would like to see the restructuring process a little bit closer to 100%. As of end of 2025, we're sitting at around 94%. Of that 94%, some 60% had reached agreement execution or execution of documentation. So we'd like to see that 60% figure a little bit closer to the 100% mark of all the debt that's been structured, and that 94% also a little bit closer to the 100% mark. So the copper price and high copper production bodes very well for the Zambian economy. Again, the fact that there's better cooperation between the major mining houses and government than there has been in previous years means high production. If you're at the point where you have excess supply and you're able to export electricity, which Zambia can do through the Southern Africa Power Protocol, that also has impact on current account dynamic. The incumbent government has made a lot of progress from a policy perspective in terms of both restructuring its debt as well as embarking on fiscal consolidation path, but also being able to help bring inflation under control